Welcome to Mind Your Business with Derline Pierre-Louis. I am Derline Pierre-Louis. I want to thank you for taking the time to stream or to listen to or to watch Mind Your Business with Derline Pierre-Louis. Many of us are not aware that we are responsible for whatever goes on our tax return. Yes, many of us are not reading the tax return because it looks like a bunch of numbers to you. It looks like a bunch of letters and a bunch of words. That makes no sense. I get that. But it is your responsibility, because the tax information, the numbers that are on your tax return for business or personal, is attested by you, meaning that IRS is going to be reaching out to you to say, hey, I see these items on your tax return. We want supporting documents, or we want clarification. If you do not proceed with providing them with that information, then it could go into you losing credits. Like for your personal, you could have child tax credit. You can have earned income credit. Many of you probably have repairs that you've done on your home, so you may have credit on replacing your fridge, replacing your roof, anything to better the home for the environment. There's a lot of credits that a lot of us don't know about, and we don't claim them on our tax return. So one of the credits that I want to talk about is your Schedule A form. The Schedule A is itemized deductions. What is itemized deduction? Itemized deduction is when the standard deduction that IRS gives you for either married filing joint, head of household, or single or married filing separate, or even widower, the standard deduction is not enough to meet the deductions that you have, which are more. So itemized deduction, what can you claim on itemized deduction? You can claim the mortgage interest. So if you have a mortgage on your home, you can claim the interest. If you have two homes, off the top of my head, I don't remember how far apart they have to be, but if your homes are in different counties or in different states, then definitely you can claim both homes on the Schedule A. But if the homes are within proximity, or you have one of them in rental status, meaning you are renting them out to someone that is paying you rent every month, or even if the person's not paying you, they're in default, it's still considered rental property. So that goes on a Schedule E. So let's stick with the Schedule A. So the Schedule A, the interest that you pay on the mortgage of your property, your primary home, your primary residence. If you do not have a mortgage, therefore you don't have interest. If you don't have a mortgage and you have a line of credit, that's still considered a mortgage. So sometimes I get that question. That's why I'm clarifying that. So you're watching, you're streaming to, you're listening to Mind Your Business with Derline Pierre-Louis, and our topic for today is tax responsibility. You are responsible. Your Social Security, your business EIN is on that tax return. Therefore, the numbers belong to you. If you are dealing with someone who is not explaining the tax return to you at the end of filing, then you need to have a talk with them so that you can get better understanding of what those numbers mean, and or you might have to look for someone else. It is their responsibility as the professional, if they are a tax preparer, a tax planner, a tax strategist, or even a financial advisor. They have the training, they should have the training, and they are the expert, and they should explain what goes on your tax return. I know many of times, as long as you don't owe, you don't care. That should not be a good attitude, because sometimes the refund that you get is probably not acquired accurately or legally. So it's not always good to get a refund. I'm not saying that you want to be coughing out money to the IRS. That's why you do tax planning. And when you do your tax planning, you already know. Right now we're 6-7 months into the new year. You already have an idea how much money you've earned for the first 5-6 months of the year, how much taxes you've paid if you have a W-2 job, or if you're in your business and your business pays you as an employee, or you take distribution. So you can make estimated tax payments, and those tax payments will apply towards the credit for the whole entire year towards your income. So back to the Schedule A form. So if you have a mortgage or a line of credit, you borrow money against the equity of your house, the interest that you pay is deductible. The tax that you pay on your property or land, if you own land, those taxes are deductible. If you have health insurance premium that you pay towards your care, so if you work for a job and they cover your health insurance, but your spouse or your dependents, you pay out of pocket, that premium is deductible. But there's a floor. So that deductible based on your income is reduced by 7.5% or 10% depending on your income. So if you paid let's say $2,200 for the year in insurance premium, I'm going very low. It's usually a lot higher than that. So if your income bracket is under a certain amount, I don't have it off the top of my head right now, 7.5% of that you cannot deduct, but anything over that is deductible. So why do you need to itemize? Many times we have crisis years. You may not have been able to itemize for 4 or 5 years, and then all of a sudden you had major surgery, out-of-pocket expenses for medical, you refinanced your house, your mortgage interest went up, or you had to take a line of credit. Now you have the first mortgage plus the line of credit or HELOC. So that's extra interest you're paying. Your property tax went up. So when you add all those expenses together, if they are over the standard deduction for single or married filing joint or married filing separate or widower or head of household, then you can complete the form Schedule A to file an itemized tax return. So your return will be prepared. Instead of using the standard deduction that the IRS has given you, you will be able to file the itemized deduction. So what else can you claim on that Schedule A? Many times we don't think about this, but when you file a claim with your mortgage, with your insurance company for your home, or you have a car accident and you have a deductible, usually it's $250, $500, or $1,000. I don't think it's any higher than that. If you have a higher deductible, then that deductible, when you do have a car accident or a theft, and you had to replace the car or replace the door, whatever happened to your car, whatever deductible you pay towards your car insurance or your home insurance, that portion that you pay is a deductible expense. The other thing that a lot of us don't think about is if you have a safety deposit box in your bank. A lot of banks have safe deposit box. If you have one of them, that portion is deductible. But those are usually so low that unless you have unless you have interest on your property, unless you have tax, unless you have land tax or property tax, and then your personal tax too, like the tax that you pay to renew the tag on your cars, if you have a boat, all those taxes that you pay are deductible in the tax section of the Schedule A. Charitable contribution. Many of you contribute from your gross earning, and many of you are contributing towards building funds or all sorts of different funds that your church or nonprofit organization that you are affiliated with or you are a part of. You contribute a lot of money, and they are supposed to send you a letter, but sometimes they don't. So it's your responsibility to keep track of your charities. So a lot of times non-business clients feel like, well, I don't have a business, I don't have to keep an accounting of where I spend my money. It's very important that you do that, because a lot of times I've found that my clients have paid out of their gross. They're earning $150,000 in the year, so they've given $15,000 to their charity, various charities, or just to their church. And then they might have American Red Cross, or they might have other local charities that are related to animals or foster care, or all sorts of different varieties that are non-profit. They have the 501c3 status. You can deduct those expenses. So let's give an example. Your standard deduction for head of household is $19,500, right? So your mortgage interest for this year was $12,000. You're very close to that $19,000. Your property tax was $6,000. You're already at $18,000. You're very, very close to that $19,500. So when you add your insurance premium, your doctor copay, and that part of the insurance premium, the medical section, includes the insurance premium that you pay to the insurance company, the doctor copays to your eye doctor, your dentist, to your primary care, to specialists, lab work. If you have to buy glasses, if your kids have braces, if you have contacts, the contact lens, the liquid that you have to use to put the contacts in or clean your eyes or whatever, all those things start adding up. Mileage to and from your doctor's appointment, prescription. Many of us are on multiple prescription, and with insurance companies not covering as much, your prescription, your out of pocket is a lot. So you're like, oh, how do I keep track of this? The prescription is the easiest, because if you use Oral Green, CVS, or Walmart, any company that you use for your prescription, they can give you a report at the end of the year. So you'll have a report of how much you contributed. So a lot of things can be deducted on the Schedule A. And so I am begging you to take a moment, take a look at your tax return and see, don't just look at the second page where it shows how much you're getting back or how much you owe, but look at the numbers. Look at the credit that you got for your kids if you have children. If they're under 17, you probably got the maximum child tax credit. If they're over 17, you probably just got the $500 other credit. And then you have dependents who are not your children, but nieces, nephews, or foster care children that you're taking care of. You can claim them on your return. And if you qualify to claim them on your return, there are credits that you may get for them. Another thing that a lot of times we don't claim on our taxes is adoption credit. Many of us pay money to adopt children from Africa, China, Asia, all these different places, and lawyer fees. Another fee too is legal fees that you pay, whether it's for a lawsuit or if you were being sued and you had to hire an attorney. Sometimes those fees are deductible. It is important that you vet your tax professional. Many of them have trained and are doing continuing education throughout the year. They're going to all the IRS forums, or they're doing their own online through the CPA organizations and so forth. Not all tax preparers need to be CPAs, and it's not to down the CPAs, but if you don't really have a business, or you're not doing real estate investment, or you're not doing major investment like retirement plans and all that stuff, a lot of times a simple tax preparer can help you. But at ESSI, Economic Solution Services, Inc., our advisors, our consultant, our tax professionals, we do continuing education throughout the year, not just in our accounting practice, but also in the tax practice, and also with our consultation. We don't want to consult you on business matters if we don't have the information. That's why it's important that when you make an appointment with us for a consultation, that we send you that survey or that the questionnaire, that you fill it out to the best of your ability. And we even leave a section for you to add additional questions that you feel that you have, that we haven't covered in the multiple questions that we've already asked you. Why do we do that? We respect your time and we respect your money, just like we respect our time. We invest a lot of our time into training, to making sure that we are better servicing your needs. And in return, we want you to feel when you leave our appointment that your needs have been met. And if they haven't been met to your liking, you're welcome to schedule another appointment. This is Mind Your Business with Darlene PIERRE-LOUIS. Today was tax topic, and it is an honor and a privilege to be able to share this information with you. If you have any questions, you are welcome to call us at 561-877-4662. My name is Darlene PIERRE-LOUIS. Have a great day on purpose.